Bloomberg Technology. Coming up, Apple's first annual sales decline since 2001 has shares sinking after hours, and that's despite better than expected iPhone sales. We'll break down all the numbers you need to know. Plus, in a bold move, French streaming service Deezer expands into the crowded U.S. market. We'll catch up with its CEO. And reports of more job cuts sends Twitter lower. We discuss the struggling social media company as it prepares to go it alone. First, to our lead. Apple shares are lower in after-hours trading, the company posting fourth-quarter sales that fell 9% from a year ago and brought the company its first annual sales decline since 2001. That was in line with analyst estimates. The other big number we are watching, iPhone unit sales, since that's where the company still makes most of its money. It sold 45.4 million handsets, down 5% from a year ago. But remember, that included just 2 weeks' worth of sales for the new iPhone 7, which brings us to the all-important holiday quarter. Apple says it sees revenue between $76 and $78 billion, a sign that sales of the new phone may be off to a strong start and beating estimates there. Joining us now for more, IDC Program Director for Mobile Services Ryan Reith, as well as our Bloomberg tech reporter Mark Gurman. Mark, you've been listening into the call. You've been blogging live on the Bloomberg terminal. What do you see as the highlights here?
The highlight here is that Apple's going to return to growth for this Q1 holiday December quarter. Tim Cook.
They believe.
They believe, so they say, and they're usually pretty good about those estimates, estimating 76 to 78 billion in revenues, which is above some of the analyst estimates that we were looking at during the past week or so. Other than that, everything is pretty much in line with expectations in terms of estimates for iPhone numbers and the Q4 revenue numbers.
I spoke with Apple CFO Luca Maestri, and we asked specifically about the Samsung issue, how much Apple will benefit from the Samsung recall. He talked a lot about supply constraint here, and specifically as it pertains to the iPhone 7 Plus. He said it's very difficult to tell, to be honest, because we're in this situation where we're very supply constrained. Everything that we produce we can sell right now, so it's difficult to identify what the different factors are driving this. Even before the situation developed, though, and he's talking about Samsung here, we had the highest amount of Android switchers we've ever had, more people coming to the iOS platform than ever before. Ryan, what do you make of those comments? And specifically, you know, talking about how if you want an iPhone 7 Plus, you can't get it for weeks, especially if you want the jet black color.
Yeah, I mean, I think that's in some sense a good problem to have, right? And I think, you know, the way that we kind of look at, I guess, the Note 7 with regards to this is that clearly, Samsung's going to lose some customers to Apple and so forth, but we estimate that to be a relatively small percentage, I think, of overall Note 7 users, I guess, initial buyers that went out there. So that's, you know, somewhere under probably 25 to 20%, somewhere in that range.
Mark, we ask this question almost every quarter, though. Why can't supply meet demand? You know, he told me that, you know, they're improving the situation weekly. They hope to, within a few weeks, have a supply and demand balance, but, you know, for years there's been a question of whether Apple really can't meet supply, or if they just don't want to meet supply to create demand.
Well, I definitely don't think that it's the latter. I know there's a lot of speculation about that. I think it's just every year, even if they don't really change the look of the iPhone, there's still new components that they have to create, especially this year with the new jet black finish that takes 9 extra steps to make it. But the thing to look at here is Apple's producing these technologies at an unheard of scale, hundreds of millions of units a year. And the amount of ramp-up time ahead of the actual announcement of the phones plays a lot into it when they start building them. So there's a lot of other factors going on here. Will they ever solve it? I don't know if they'll ever will be able to do it to that high of a degree as their growth or even staying at the status quo continues probably over the next half decade.
Certainly next quarter we'll see perhaps a clearer impact of what's going on with Samsung, what's going on with the new Pixel smartphones that are also going to be coming out. I also want to talk about China because we saw a 30% revenue decline there. Luca Maestri telling me, let's look at it over the longer term. If you look at it over the last couple of years, we've still been growing 23% year over year. Tim Cook has also been asked about China and India on the call. Let's take a listen to what he had to say about China.
We are very bullish on China. You know, we continue to see a middle class that is booming there. There might be some sort of a new normal in the economy, but a new normal there is still, you know, a good growth rate.
Ryan, how big a deal is a new normal in China for Apple?
Yeah, I think it's a really big deal, right? Because I think there's a lot of changes in China, and China has had, I think, some bad publicity in the media over the last year, mainly because its device market has slowed down. But I think what we've continued to see is growth in the premium segment, right? So Tim Cook continues to talk about, kind of the middle class, and I think, that's really where I think they are seeing business for iPhone, and I think it bleeds into things like Mac and so forth as well. They're going to have some hiccups, right? Just like everyone else, right, in that market. But I still think that China presents a huge opportunity for Apple going forward, and I think that if you look at how much they continue to invest in terms of brick and mortar build out and so forth, it's very apparent that they see the same as well.
On the call, Mark, Tim Cook did say India is a huge opportunity, but it will take some time for it to become as big of an opportunity as China. Elaborate a bit more on what he had to say.
Right, so India, he said, has a big growing opportunity because the population, over 50%, is of people under 25 years old, which is one of the bigger markets for smartphones. The smartphone so far, he said, hasn't shown a lot of penetration in the region, but he says there's going to be a lot of investments into 4G networking technologies and new carriers over the course of the end of this year through the next year, so that should spur a lot of usage because the iPhone and the cellular connectivity really go hand in hand. You can't buy an iPhone if you don't have a network to run it on. So there's a big opportunity for them in India, and I think that's sort of going to replace the growth they had over the last few years in China.
Apple has also been talking about services revenue for a long time, which is now growing 24% to an all-time high. But still, look, iPhone revenue is 10 times what service revenue is. Tim Cook was also asked on the call about new products, specifically cars. Take a listen.
The car space in general is an area that it's clear that there's a lot of technologies that will either become available or will be able to revolutionize the car experience, and so it's interesting from that point of view, but certainly nothing to announce today.
Mark, you've been reporting in great detail about this. Anything really new there?
I think this is the first time where he came out and said, yes, Apple is working on technologies for the car. We actually had a story this morning that Apple's working on the core operating system up in Canada, which is about a block away, their office, from BlackBerry's automotive software headquarters, so that's interesting. We had a story last week about how Apple halted plans to develop the actual car, full-fledged vehicle, focusing in on the technology, which Cook seems to slightly imply.
All right, and you are going to be at the Apple event later this week, where we believe they're going to be unveiling a new line of MacBooks. How significant?
I mean, I think it's significant. It's progress, right? I think it's the direction, but I think clearly, I don't see this as something revolutionary. I still think that, the focus around iPhone, I think next year is the big focus to see if they can actually rebound this is going to be even much bigger.
All right, Ryan Reith of IDC, Mark Gurman, our Bloomberg Apple reporter, thank you both. We're going to be continuing to watch the headlines as they roll in. A stock, though, we are watching, Pandora tumbling, and after-hour trading reporting slower sales growth for the third quarter. We'll break it all down next. And on that note, the French streaming service Deezer trying to make a market for itself in Pandora's backyard. CEO Hans Holger Albrecht explains the strategy to me next. This is Bloomberg. to a stock we are watching. Pandora reported earnings that missed analyst estimates for the third quarter. Shares of the music streaming service tumbling in after-hours trading after reporting slower sales growth as the user base shrinks. Active Pandora listeners fell to 77.9 million from 78.1 million a year earlier. Staying with music streaming, the French company Deezer is looking to expand its presence in the United States after launching here earlier this year. But it's a cutthroat market where rivals Spotify, Pandora, and Apple Music are already competing on price and exclusive content deals. I sat down with Deezer's CEO, Hans-Holger Albrecht, and asked him how the entry into the United States is going. Take a listen.
We have seen good traction when it comes to new customer registration. We have seen good feedback when we talk to the various customers. But you know, we have been here for a while in the United States with an offer we had with Cricket and with our partners like Sonos or Bose. So it's not a completely new entry, but our direct customer business has been received so far quite nicely.
Your biggest competitor in Europe is the same as your biggest competitor here, and that is Spotify. Of course, there's also Pandora and Apple Music. What differentiates your service from them?
I think we have a different approach when it comes to what we're going to give the consumer. First of all, we try to make it a very individual product, so people can really get the music they want to have with pushing one button. The second point is we have diversified the product into non-music features as well. We're doing podcast. We have over 40,000 hours of podcast, for example. We do live sports streaming. We're doing audiobooks. And we have a model how we reach a customer, which is slightly different as well. We like to work with partners, so we have big partners like AT&T, Vodafone, or other big telco companies. So we serve a segment in the market which is slightly different than Spotify's.
Now, you did cancel your IPO and plans for an IPO, but Spotify, as far as we understand it, is moving forward with theirs. Has that made you reconsider your plans at all?
No, look, I mean, we cancelled the IPO because we had alternatives. It was not that it was only everything hoping on the IPO as such. We always knew we can go back to the private market. We can go to our existing shareholders and ask for funding, which we did. We raised money. We raised 100 million euros in the last couple of months from various shareholders. So we have flexibility. We can wait and see. We can decide to go for an IPO later on. We can decide to stay private. Choice is a good thing to have nowadays, and we have this choice because of our financial situation.
At the time, you said the market was volatile. How would you characterize the environment to go public right now?
I think it's changed a bit. I mean, you can see that if you put the financial market as such aside, the sentiment when it comes to streaming is much more positive. People realize it is a way people consume music in the future. People can see the kind of change in economics when it comes to the royalties, for example, we pay to the labels. And people can see it's a big opportunity because it's still at the beginning of a market penetration. We are less than 10% penetrated, for example, in most of the markets in the world. So I think the sentiment is much more positive than it was probably half a year ago. And the financial market, I guess, will be more positive as well.
Now, Deezer doesn't have a free ad-supported tier like Pandora and Spotify. Is that a business model that you would consider? And do you think that model has a future? For example, Pandora, has been free, but they're trying to convert their free users to paying users.
Yeah, and we have a free model as well, not in the US, but in the other European markets, for example. We have a free offer using this as a funnel to convert those users into paying customers. I think it is an interesting model. It's one of the most effective ways to convert customers over. For us, however, it's not a business in itself. It's rather a kind of way to get customers in and then try to convert them fast. More than 90% of our revenues are subscription. Our business is predominant a subscription model. Hence, it's one of the many kind of ways how we sell the product. It has its existence. It's not a bad way to do it, but it's not the only way how you can get the customers into a subscription model.
So how do you see this streaming music wars playing out? Do you see multiple winners? Do you see one or two big winners? And where does Apple fall? In which category?
Yeah, I think it's like in every business. You're going to have a couple of players. It's not a winner-takes-it-all markets. You have different segments, as I described it. You have different regions. And, music is very local as well. And the kind of product we're offering is very local. and there are going to be different kind of offers and opportunities for each of us. So I think it's going to be a couple of players in that field. The key factor is you need a very strong, good product to compete, which obviously Deezer has. Apple will be one of them. I'm pretty sure they have been around now for 2 years as well. They have, of course, the infrastructure in terms of the mobile business. They have the legacy of the music business. So they're going to be there, like other ones as well. Competition is not new in this segment. So I think it's going to be a multiplayer market, but not too many either, as you can see with the departure of smaller players nowadays.
You need to have, exclusive content from certain artists to win users, or is that not the right strategy?
I have my doubt. I mean, we're testing as well exclusive content with some artists in some of our core markets. But I have my doubts because it's tough to make a consumer proposition which is so unique on a short-term exclusivity with one or two artists that really change the kind of view people look at streaming services. It's not like sports, where sports is something you're going to have for a long time exclusive and has a big impact. It's tough to create on the music side. So I'm not sure you can make a kind of offering for the consumer which is attractive enough. And the second point, I'm always concerned when you talk about exclusivity. I have my doubt that the consumer will go to different streaming services in order to have different kind of artists. And hence, if you make it too complicated for the consumer, I think the whole market will suffer. And you always face, which is still there, of course, as well, the risk of an increase of piracy again. So I think that the model we have currently, where if you subscribe to Deezer, you get all the music you want and more, I think is a better model.
That was Hans-Holger Albrecht, CEO of Deezer. Meantime, Deezer competitor Spotify says it is investing in original videos and events with artists in the next 6 to 12 months. But the company still firmly stands against signing artists to exclusive deals. Spotify's chief strategy officer, Stefan Blom, spoke about this at the Wall Street Journal D-Live conference in Laguna Beach. Take a listen.
We're pro-choice, so anyone can actually make their own decision, but we don't believe in it for the artist's sake. I mean, we don't believe that it's good for the artist. To grow a fan base and develop your career, I think you need to meet the fans wherever they are, actually. So that's why we aren't doing exclusives at all.
Spotify has had a somewhat contentious relationship with a few top musicians, including Taylor Swift and Adele, who have both withheld their albums from the streaming service. Still ahead, we stay with music streaming and catch up with Berlin-based SoundCloud. Will the company remain independent? Our conversation with SoundCloud's co-founder and CTO next. Plus, a reminder, all episodes of Bloomberg Tech are now streaming live on Twitter. Check us out at Bloomberg Tech TV, weekdays 6 p.m. in New York, 3 p.m. in San Francisco. This is Bloomberg. SoundCloud is looking to stay independent, so says its CTO and co-founder Eric Walfors. He was responding to reports that the Berlin-based music startup is on the market. Walfors says the company is instead focused on growing revenue and expanding to remain independent. Bloomberg's Carolyn Hyde spoke with SoundCloud's co-founder in Berlin and began by asking about the company's focus on revenue growth. Take a listen.
It's been a busy and exciting year for us. So we started the year basically not being launched in any market commercially, and in March we launched in the US with SoundCloud Go, which is a subscription service. We've been busy ever since, basically rolling out 6 international markets in the last 6 months. So the last market being Canada, which we launched last week actually. So we've been very, very busy, and growth is extremely good, both on the user side, but particularly on the revenue side, since we're rolling out advertising as well in all of these markets.
Can you give us a sense of numbers when you're saying growth? Can you give us percentages, that sort of thing?
Yeah, we're not talking about numbers yet on the subscription or the ad side. What I can say is that there's been a lot of pent-up demand from our user base, because we're effectively a global platform. So we're 175 million unique listeners on the platform, and so there's been a lot of requests for the types of features that is now you're able to pay for with the SoundCloud Go service. So things like offline syncing, and you can remove the ads, and you get access to all of the content, any of the content that you'll find on another subscription service, through all of the major labels and so on. We now have all of that stuff on SoundCloud alongside of all of the great content that's been available in the past. So it's a really, really compelling offer, and so it's been great to see that getting to so many users in the world.
How has the USP been easy to identify vis-a-vis the Spotifys, the Pandoras, the Apple Musics? How are you distinguishing yourselves? Because it's very much about user-led content as well, to a certain extent, on SoundCloud.
It's a kind of a social network where creators share what they do, and they sort of share in real time, and then they connect with their fan base. And so it's very vibrant and sort of different in many ways. Also, what we see is that our audience skews very young. So we talk a lot internally these days about what we call Generation C, which is sort of the teenagers of today. The easiest thing to think about Generation C, I think, is the millennials, they had maybe an iPod as their first gadget, but Generation C have essentially a supercomputer as their first gadget, the iPhone or an Android device. And so that's a very different world. So they are able to connect sort of in a very authentic way, I think, to artists and what they do on the platform. So SoundCloud fits their life in a way that other services maybe don't. We're hiring more aggressively than ever before. We're growing revenue extremely fast at this point. So we're very excited about where things are headed. But yeah, it takes a lot of investment to roll something like this out.
To remain independent?
Yeah, I mean, definitely. That's ultimately, as a founder as well, that's kind of where you want to go. Is you want to have something that's a completely sustainable and well-functioning business, and obviously that's what we're focused on doing.
Bloomberg's Carolyn Hyde there, interviewing SoundCloud's Eric Walfors in Berlin. Well, the S&P 500 is reaching levels just 2% off all-time highs. The index has been bolstered by big tech companies, with Apple, Amazon, and Facebook accounting for 20% of the index's gains, according to data compiled by Bloomberg. Microsoft has added about 5 points to the index, and Alphabet added approximately 2 points. Still to come, Twitter looks to slim down as it faces the future without a buyer. We'll focus on planned job cuts and Thursday's bumped up earnings next. Plus, the company using tech to change the way athletes train, starting on the courts. That story is ahead. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. Defense Secretary Ash Carter says the U.S.-led coalition is laying the groundwork for the start of the operation to retake the Syrian city of Raqqa from Islamic State. Following a meeting in Paris with European defense ministers, Carter said there's a strategic principle to all coalition operations.
It is capable and motivated local forces that we identify and then enable. That's our general strategic approach, because we're seeking the lasting defeat of ISIL. And a lasting defeat of ISIL can't be achieved by outsiders.
Meantime, U.S.-backed Iraqi forces continued their advance near Mosul, another Islamic State stronghold. A new poll shows former French Prime Minister Alain Juppé has widened his lead in the race for next year's Republican presidential nomination. Juppé now has an 11-point advantage over former President Nicolas Sarkozy. U.S. prosecutors are preparing to charge several individuals and confiscate their property for allegedly looting Venezuela's state-owned oil company. According to people familiar with the case, $11 billion may have been stolen from PDVSA. Among the assets the U.S. government may seize, homes in Florida and in Texas. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Tuesday here in New York, 9:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Looks like a bit of a down day across the region today. If we check in on New Zealand, been trading for 90 minutes now, and it's already off about 0.1%. We're expecting to see some weakness on the Nikkei as well, and ASX futures also pointing down about 0.2%, although it's worth pointing out the SPI futures have not been terribly reliable this week. Be worth watching shares in Ardent Leisure when the ASX opens at the top of the hour. The Dreamworld Leisure Park on the Gold Coast was hit by a tragic accident on Tuesday afternoon. 4 people killed on one of the theme park's rides. An investigation is underway into that, but shares in Ardent Leisure declining by the most since November 2015. Keep an eye on the Australian dollar today as well. Third quarter CPI is out. That's expected to show an improvement to the inflation outlook here in Australia, recovering to 1.1% on year. Bear in mind the Reserve Bank of Australia has cut the cash rate on both the past 2 week quarterly inflation reads, although the new RBA Governor Philip Lowe says the board are not, quote, inflation nutters. A couple of earnings worth looking for today as well. Bank of China later on and Hyundai Motors as well. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Our top story this hour, Apple earnings. The world's most valuable company posting fourth quarter earnings after the bell, and investors so far don't like the fact that the average selling price of the iPhone has slipped. Joining us now for the rest of the highlights, our Bloomberg Tech reporter, Alex Webb. And Alex, you and I both talked to Apple CFO Luca Maestri on the phone. We did talk a little about this ASP issue and the fact that the price of the phone has dropped year over year. However, he pointed out it's actually increased when you look at it quarter to quarter. What is significant about this?
I mean, I think this, they would love to draw attention to quarter-over-quarter stuff. I think the thing we've really got to look at more closely is the forecast going into the next quarter. Going to 3 months approaching Christmas, they have said that they expect the ASP to increase in that quarter. But if you look at the problems that have been endured by Samsung over the past couple of months, you know, the exploding phones practically, a lot of people in the market are asking, why on earth hasn't Apple given itself a way punchier guidance? Because they've got a lot of market share which they could win out there.
Exactly, and you know, I thought that very same thing when he responded to our question about Samsung, saying it's too difficult to tell how this is going to affect us. It sounded like they were being very conservative.
Yeah, and this is something which isn't necessarily a bad idea to do, certainly from an investor relations perspective. If you try and temper expectations, that of course means that going into the quarter, if they do surprise, then it's a positive, and one might expect that it would affect the stock price positively when they report those earnings come the new year. But as it stands, there are a lot of people out there who think it's a bit too conservative, and there were a lot of questions asked about it on the conference call.
Let's talk a little bit about what else came up on the conference call. Tim Cook talked a little bit more about television, calling it an intense interest for him and others. Tell us more about what he had to say.
It's really interesting the way he passes his words very carefully in this sort of thing. You think he's about to come up with a solid answer, and then all of a sudden he doesn't. He said that he has intense interest in television and that television content is very appealing. This, of course, is in the context of the Time Warner deal, which AT&T has done in the past week. We know that Apple had talks with Time Warner, very tentative, earlier this year, late last year perhaps, and the ambitions that Apple has in the television space have been widely reported. They've been trying for a while to come up with some sort of Netflix-like product, but because the television and film industry has seen what happened to the music industry, namely that Apple became the most dominant player, holding a lot of the keys to the castle, they're incredibly wary about giving those same keys over in the video content space.
And what about acquisitions? Apple is a company that has historically not made big acquisitions. They made the biggest under Tim Cook, the acquisition of Beats for $3 billion. Now he's saying on the call, we're open to acquisitions of any size.
I mean, he said this earlier this year as well. He said it in, I think, the March conference call, namely that Apple was prepared to make sizable acquisitions. This was perhaps a little more open still, saying that they're open, as you say, to acquisitions of any size. The proof is going to be in the pudding. You know, we haven't seen any deals of this size yet. There's a lot of talk about it. Maybe it's giving, you know, a little bit of promise to investors that, you know, we do have a plan going forward. We do want to be entering new spaces. But until that actually happens, then we have to approach it with a certain amount of skepticism, I think.
All right, our Bloomberg Tech reporter, Alex Webb, who covers Apple. Thank you so much, Alex, for pulling out some more of the highlights for us. One company that Apple is not buying, as far as we know, is Twitter. Twitter, another stock we are watching. We've reported the company is planning to fire about 8% of its workforce as it prepares to soldier on as an independent company. People familiar with the matter said the announcement could come ahead of Twitter's third quarter earnings report this Thursday. Meantime, the stock has recovered in after-hours trading on new reports of rekindled buyout interest. Our Bloomberg Tech reporter, Sarah Fryer, joins us now with more. Sarah, you brought us the scoop yesterday about Twitter planning more layoffs. Now we have this site called Betaville reporting that Disney is back in the game, interested in buying Twitter. You know, after all, you know, what do we make of this?
I would caution you to believe that report.
Investors are excited.
Investors are excited, but here at Bloomberg, we broke the story of Disney's interest in Twitter, and we broke the news of why they weren't interested, and we continue to be in constant contact with our sources, and if something happens, we'll tell you, but I wouldn't believe a random internet site that at least I've never heard of.
And as far as we know, Disney is off the table. Salesforce is not interested.
Based on what our sources have said,
interested.
Twitter is going it alone, which is exactly why they need to consider cutting some of their workforce. I mean, Twitter has slowing sales, no signs of growth recovering for them, and so they need to take some initiative here with getting to profitability, and cutting some workforce would definitely help them on that path. It would also help them with their stock compensation. It's become a lot more expensive for Twitter in terms of stock compensation as their stock price goes down and as they need to continue to retain employees.
You know, Twitter is it's a fairly large company, what, like 3,500 or so employees. One source I was talking to suggested that they should be cutting 2/3 of the staff, not just 8%, and that at a smaller business of, you know, a size of maybe 1,000 people, it's actually not a bad business.
Right. Many people I've talked to have said the same, especially people who have actually worked there, who say, oh my gosh, there are way too many people working on this one product. And similar companies of Twitter's size, you know, don't need as many people to get that job done. However, I mean, this is a company that was flying high for many years and was one of the most desirable companies in the Valley to work for. And for many people still is. So they've been able to recruit quite a bit.
So what does the road ahead look like for Twitter as an independent company?
Twitter's going to have to figure out how to make live video work well. And not just work. I mean, we've seen for the presidential debates, their partnership with us and with the NFL and with some others, they have gotten large audiences to come to their platform. But we need to hear from the executives on Thursday that's where the money's going to come in too, and that there's more to that in the future, and that could actually be a real entry point for new user growth.
And by the way, this show, Bloomberg Tech, is streaming live on Twitter. Bloomberg is one of the companies that Twitter does have a deal with, so I'm watching you on Twitter right now on the left-hand side talking about, it's very meta, Twitter's live streaming potential and ambitions here, but is this it? Is this it? Is this the future of Twitter?
We'll hear on Thursday. I mean, as far as we've seen, this is the thing that Twitter is betting everything on. Their product updates are all in the direction of helping people understand Twitter as the place to go for what's happening now in the moment live. But this is a company that in the past has had trouble getting advertisers on board with this new stuff, and they really need to make a big push on Thursday to try to have Wall Street understand that this strategy is actually going to bail them out of quarters of slowing growth.
Right. Well, of course, I know you will be all over earnings on Thursday. What's happening in the moment?
At 4 a.m.
Sarah Fryer talking about Twitter live. Sarah, as always, thank you so much for bringing us that update. AT&T will sell its 100-channel plus online streaming TV service DirecTV Now for $35 a month. It'll also experiment with a la carte distribution of programming. AT&T, which hopes to buy Time Warner for $85.4 billion, is developing the service to respond to online-only TV competitors like Netflix and Amazon.com, which have been luring its customers away with lower-priced alternatives. CEO Randall Stevenson spoke about developing new ad models to support high-content costs at the WSJ-D conference.
We'll begin to develop new ad support models where you can, that $35 price point, these content costs are not going to be flat. So how can we develop new ad models that will allow us to keep the price point in check, offsetting the price increases on content? I think that's really, really important.
Coming up, the U.S. presidential election less than 2 weeks away, and SurveyMonkey has unveiled its latest poll tracking technology. Who is ahead? That's next. And this is Bloomberg. The latest NBC News SurveyMonkey data puts Hillary Clinton ahead of Donald Trump by 5 points. The national results favor Clinton 46 to 41%, while Libertarian Gary Johnson gets 7% And Jill Stein, 3%. That's about the same as last week's results. In a two-way matchup, Clinton leads Trump by 6 points, 50 to 44%. SurveyMonkey also just came out with real-time polling maps to illustrate its predictions for the Electoral College results. Joining me now for more here in the studio on the latest political data, John Cohen, Chief Research Officer at SurveyMonkey. So, John, first of all, let's talk about how your technology improves upon what was available 4 years ago. How do we know that this is actually a better representation of what Americans actually
Sure, it's a great question. I mean, really, the problem facing the entire industry for decades has been a technological one. It's like there are plenty of respondents out there. They're just not sitting at home waiting for a telephone call anymore. And so what SurveyMonkey's been doing a long time for people and organizations around the world is connecting, them to respondents and getting them at, kind of a very high quality look at whatever they're interested in. What we're doing here is setting our sights on the biggest challenge around, which is predicting the election in all 50 states. We're not just looking at 6 states that may tip the balance this year or any year. We're looking at all 50. This is about electing a president, and everyone's vote matters.
So everybody wants to know if the polls are accurate. Is this what's actually going to happen on Election Day? And how confident are you that in 2 weeks the numbers will be about the same?
Well, the numbers have been super stable for about 5 weeks. I mean, as you know, a lot has happened over the last weeks, from the first presidential debate to the last one last week. Lots of allegations, charges back and forth. The race effectively hasn't moved at all in our data nationally. And what we're seeing here is a 50-state look where things are moving very glacially. But Clinton, in our inaugural map that we launched today, has 307 electoral college votes locked up already. That's more than enough to kind of give her the presidency.
So. Is there a chance of another Brexit whereby, nobody saw Brexit coming, the polls didn't see Brexit coming, and there it was? Is there a chance of Donald Trump winning this election, even though the polls say he won't?
There's always a chance, and it's a very slim one this time, but let's compare it to Brexit. What Brexit actually showed, the polls in Brexit anyway, showed a really tight contest. If you look the Monday before the Thursday vote in Brexit, our poll actually had Leave +1. It did go to Remain toward the end, just like every other poll, so it was on the wrong side of that 50-50 coin
And why
flip.
was that? What went wrong?
Well, there are a lot of things that went wrong, including kind of young voters. The Remain campaign was extraordinarily reliant on young voters, and they tend to be unreliable. And so, many didn't show up to the polls, and that tipped the balance of what turned out to be a coin flip, went the wrong way from the polls. But I will point out that the polls were the least wrong thing when it came to Brexit. The markets had priced in Remain by gigantic margins, basically the entire campaign. So the polls showed a contested contest accurately. It happened to be on the wrong side of that at the end, but it was because they got a very close race wrong. This isn't a close race right now. So it would be a much bigger failure, not only of polls, but all prognostication that's out there for Donald Trump to close the gap.
And break down some of the demographics sort of within the people who are voting, millennials, seniors, the East Coast, the West Coast, who's leaning what way.
And that's one of the important things that we launched today in our map. It's not just about who's up or who's down and who's going to win, but you actually get to dig in and look at how are millennials voting, how are people of color versus white voters, how are they voting? Because that's about explaining the election, not just kind of coming up with what the Electoral College outcome will be on election night, but understanding what's happening in our country today. This is an important political moment, and we're aimed at explaining it.
Now, it's interesting. I voted, but I've never been polled, so I'm always wondering, who are they talking to? Where is polling tech going? How do you get everyone?
Well, as always, it remains, kind of dependent on getting a good representative random sample. And the methods of doing that have changed over time. We have one at SurveyMonkey that's, kind of because we have 3 million people a day responding to surveys around the world, and we can do random sampling on top of that. But it's still having a rigorous methodology. It's not just about the number of people you get. It's about who you get, and then making defensible, justifiable, proven adjustments.
So can you put a percentage on it, percentage chance of Hillary winning over Trump?
Well, it's well over 90%. I think it probably, kind of, and every day that goes by, it goes up.
All right, John Cohen of SurveyMonkey. Great to have you back here on the show. Great to see, fascinating to see the results that you have broken down there. Thanks for joining us. Back to the Wall Street Journal G Live conference in Laguna Beach, where Facebook COO Sheryl Sandberg just spoke. Take a listen to what she had to say.
It's really core to our mission that people can share what they care about on Facebook, and that includes everything from it's my friend's birthday to, here I am at this conference with my friend Chris, to things that matter to them in the news. We also want to be a really safe community. There's no place for violence, terrorism, hate on Facebook. Now, That stuff sounds obvious. Like, of course, those two things are true, but those two things can come into conflict because one person's free expression can be another person's hate. As we've evolved, we know that people are sharing more newsworthy content on Facebook, and it's something we want to make sure we enable.
Coming up, the tech that some of the best in the NBA are using to up their game. Next, this is Bloomberg. The 2016-2017 NBA season is set to tip off, and one company helping players amp up their skills on the court is PlaySite. The Israeli-based company produces smart court technology that dishes out analytics and stats to help players up their game. Some of the names implementing the technology: the Golden State Warriors, the U.S. Tennis Association, and the Edmonton Squash Club in Canada. Joining us now to discuss, PlaySite CEO Chen Shachar from New York. So Chen, first of all, explain to us how the technology works.
The technology works. We use cameras and digital imaging technology to record all your training and matches sessions. We analyze the performance, and everything is uploading to a personal profile of every athlete on the cloud.
So I know this is implemented in Oracle Arena. As a Warriors fan, I have to ask, do you have any fun stories about how this has been improving the Warriors game, or Steph Curry in particular? Got to give something to the fans.
So we know that the system is being used in every practice session, and actually what the technology gives the Golden State Warriors and other NBA teams is the ability to record every practice, every move from different angles, so they can break down their game, provide instant video replay, work on the players' development and tactics, and maximize the team's performance.
So it costs $10,000 per court, $5,000 to run per year. What is your target market, and what is your target sport, or is the goal every sport?
So it's actually an interesting question, because what PlaySite does, and when we founded PlaySite, we wanted to bring the most advanced technology to the mass market. So actually our technology is applicable from 10-year-old kids to Steph Curry, and everybody can take some of the capabilities of the system. And although we have systems at the professional level, we are actually more excited about the junior level, about our mission of using technology to take kids out of the screens, out of the Pokemon Go, and into practicing sports.
And what do you see in terms of future implementations of this technology? Could it be implemented in wearables, for example?
Absolutely. So if I can tell you a little bit about where sports technology is heading up. So in the next few years, we will see more and more what we call smart courts or digital courts. And when I say smart, I mean courts that will be connected to the internet. They will have built-in cameras. And this technology will communicate with any wearable that the players will wear. So you will see in the future people wearing smart shirts, smart shoes, walking into a smart court. The system will recognize them and will fuse all the information from all the sensors, all the environment into one place to maximize the player's performance and make it more fun and challenging on the way.
And how do you handle the data and privacy around the data? I'm thinking, you know, a new generation of Moneyball for sports. I mean, this is data that presumably people outside of the players and outside of the teams would really like to have.
Right, so we are very minded about privacy, and every athlete and team have their own profile. Only they have access to the data, to the video, to the stats, and only if they want to share their performance with others, they can. Even we don't have access to the data of the players.
All right, fascinating stuff. Chen Shakar, CEO of PlayState. Thank you so much for joining us.
Thank you for hosting me.
And of course, we are keeping our eyes on Apple, our leading story this hour. Shares lower after hours after the company posted fourth quarter sales that fell 9% from a year ago. This brought Apple its first annual sales decline since 2001 in 15 years. The company also said the average selling price of its most important product, the iPhone, slipped in the fourth quarter. However, the company did boost its forecast for the holiday season. And that does it for this edition of Bloomberg Technology. Tomorrow, we will sit down with IBM CEO Ginni Rometty live from Las Vegas. Remember, all episodes of Bloomberg Tech are now live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 6 p.m. in New York, 3 p.m. in San Francisco. That's all for now from San Francisco. This is Bloomberg.